If you've got a small account and you want to get into SoFi puts, in today's video, I'm going to show you how you can do it on Fidelity. Yo, what's going on, Premium Chasers? I hope you're having a God-blessed day today. Every single person that comments down below is going to get our beginner option seller starter kit. So if you want that full kit, make sure you drop a comment down below right now, and I'll personally respond to you with our beginner option seller kit. So also hit the like button and subscribe button. Guys, today we're talking about selling cash secured puts on SoFi. Now, SoFi has been on an absolute tear recently, as we have seen. I'm over here just on Yahoo Finance, and you will see that SoFi is trading at almost $22. I mean, all week. I mean, up 3% pretty much every single day, and has been on an absolute tear. Retail is really pouring into this. Now, a few of you have asked me, hey, Pete, like if I want to do like cash secured puts, is right now a good time to even do those on SoFi? So let's kind of talk about this and bring this down back to reality, because SoFi has been going parabolic, and everything obviously I talk about is not financial advice, just the stuff I'm doing, and we'll show you guys a little bit of the stuff that we're doing here on the portfolio that I share here on the channel. So you could see here on SoFi, I have a 17.5 deep in the money covered call going on SoFi, right? Meaning I'm going to be selling my shares on August 1st for 17.5. Am I beat up about it? Absolutely not, right? Most of you that comment on some of this stuff, you're like, oh, I'm beating myself up over that I'm selling my shares at this price, right? And for me, I locked in gains, totally happy, could have just as easily gone the other way. Now, what's my plan kind of moving forward, especially with doing cash secured puts on SoFi? Well, let's talk about it. You can see we are blown past. We have been living over the top Bollinger Band on SoFi. You don't see this often, and trading well below the or above the 2 and 300 day moving averages. Now, SoFi, I believe, is just, earnings are basically a week or 2 weeks away from the time of me recording this video. And I think we're seeing a big earnings pop right now. Okay. So what does that mean? Well, we've seen many times where companies do earnings and they even beat expectations, yet the stock still comes down afterwards, right? We see this all the time with Nvidia, where, because even though you beat those expectations, it still wasn't enough. I know, no rhyme or reason, doesn't make absolutely any sense. Do I think that's going to happen to SoFi? Yes. Yes, I do. I think SoFi is very due for a big pullback, and a lot of retail investors are I think there's going to be a big sell-off. The second we see a bit of a pullback, meaning like, a 6-7% drop, the retail is going to start kind of dumping their shares. Okay. Now, do I think it's going to get back to these 2 and 300 day moving averages? That's hard to say. I could see it getting back to around that $16 level, however. So let's kind of talk about selling cash secured puts on SoFi, even though the setup isn't great, because some of you want to still get into SoFi. You want to deploy some of your capital, but you're like, hey, like the setup's not nice. There's really no great setups at all. Everything's trading at its top Bollinger Band right now, but I still want to do some cash secured puts on companies I believe in and don't mind holding. Keyword, don't mind holding. So let's say SoFi that is for you. So here I am in my Fidelity account. A lot of you have been asking me for some more tutorial style videos on Fidelity. So here it is, right? We're going to go over to this quote section right here. Now I'm still getting used to the whole interface here. As you guys know, I fat fingered my Campbell's put here. So that's fun. So I just type in SoFi right here, and then I'm going to go over to the view options chain. Okay. Now I have to retype it in here for whatever reason, and we will type in SoFi right there. Now we have our options chain. Now this is a lot more intimidating than when we look at, like, for example, a Robinhood options chain. I get it. Everything's a little intimidating when we first started, but it's not that complicated, okay? This is a way better interface than Robinhood, and there's so many great benefits to Fidelity. I'm not, affiliated with them at all. I wish I was. Fidelity, please sponsor me. I would absolutely love it. But with that said, right here, we're seeing our options strategy, right? Now, I like to clean everything up here for myself to make sure I'm clicking the right buttons, all right? So right here, I'm just going to click puts, right? Then I'm going to be doing, right, puts right here, right? And here is my expiration date, okay? These are my expiration dates. I love that we can just go see the earnings right on this actual options chain. Absolutely love that they do that here on Fidelity, right? So we could see that our report date is going to be July 29th, right? So we have all of these kind of, marked down, right? If we want to do like the 11th, right, we would see our options chain, right, expires today because that's when I'm recording this video. Obviously, there's no juice here at all. So, we can uncheck that one. And let's say we just want to get started doing like a monthly or something, right? So let's go out to, August 15th, right? So it's a little over a month away. And now we are on the cash secured puts, right? And this is where we can select the strike price that we'd be comfortable buying 100 shares of SoFi at. So for example, right, we can see here the $17 put, we would collect $31 on, right? The $18 put, we would collect $48 on. A few key terms to understand, right? So if I click into this, this is going to open up the order, okay? Now I'm just going to select my account here. It will be blurred out on your end there. But you can see I'm saying sell to open, right? These kind of terms Robinhood like doesn't use, and they're so important. I'm selling to open this put, right? And we'll just put quantity 1, right? With the expiration date of August 15th, strike price being $17, right? And we could select, do we want this to be like a market order? Do we want this to be a limit order? This is important depending on what the bid-ask spread is going to be. This is how I fat-fingered the crap out of my Campbell's soup put. So make sure, if this is a big bid-to-ask spread, 31 to 33 is pretty tight here. In this case, usually I would just do a market, right? I would just be like, okay, just give it to me at market value. Or what you could do is you could just go meet right at the middle, right? So you do a limit, and then this is where you could just do your midpoint. That's also what I do. Just do a midpoint of 0.32, right? That's between 0.31 and 0.33, right? So we would collect $31 and $35 of cash from the options buyers, okay? So now, there are fees associated with Fidelity. That is one of the cons with Fidelity. That is, there is a 65-cent fee that is included. However, right, one of the best parts about using Fidelity is that when our cash now to buy these shares, we're at $1,700, right, we're essentially locking up until August 15th to potentially buy those 100 shares, right? We're actually going to be earning interest on that $1,700, right? Passively through Fidelity. No other brokerage does that. That is why I'm such a big believer now in Fidelity, right? So for me, I am totally cool, right, buying, right, or locking up my $1,700, right, for the month. Now, is this a good trade? Is it not? This is totally personal, right? For me, I wouldn't, me personally, I wouldn't do this trade right now because SoFi is so high up. I'll be looking at different kinds of setups that I can do. But somebody that's like, hey, you know what? I kind of want to get into SoFi and I want to put some money to work. It's not necessarily a bad trade if you actually believe in SoFi and want to own 100 shares at 17, okay? Cannot stress this enough. Now, you can obviously open up as many contracts as you want and obviously for open interest, right? But understand that you will be tying up drastically more capital, right? And potentially having to buy, if you did 10 contracts here, you would be buying essentially 1,000 shares potentially of SoFi at 17. So that's the biggest risk when you're selling the cash secured put, right? When August 15th rolls around, if SoFi is trading, let's say at, around $20 still, right? Your contracts would expire worthless. Obviously you keep that premium up front. You're getting that premium and you're keeping that up front. But if, let's say, SoFi is trading at like $15, right, on August 15th, right? Well, you're now going to be on the hook to buy those shares that you said you were going to buy at $17 a pop. And that is the biggest risk of cash secured puts that you have to understand, right? That you have to make sure that you have that conviction, you have that belief in the stock, okay? Now, obviously, once you have your position open, right, and you go to your accounts page, you'll see that you'll have your positions right here on your account. You'll have your cash that's held in your money market, right? So I have the $3,200 that's being held there. That's the one that's earning obviously money. You can see I have a call here. Yours traders would say you have a put here, right? I have a cash secured put on Campbell's right here that expires on August 1st, right? So that's how it would look for you here, okay? Now, there's a couple ways to manage these positions, right? Now, if I, let's say, wanted to close, like, well, let's just pretend this Campbell's one is the SoFi example. You have options, right? Pun intended, right? If I open up this contract now, I can buy to close it. That means I will close this out early, right? Instead of waiting till August 1st and my $3,000 is wrapped up to buy 100 shares of Campbell's at $30, right? I can buy to close it, right? Meaning I will give back some of the premium I collected, right? And move on to another opportunity. I can also roll the position, right? Now, let me quickly go up to buy to close to show you what it looks like, right? And that's all it's doing is switching this section from sell to open to buy to close. And it's going to auto-populate all of your information here, right? And then if I just do, market order right here, right, it would cost me, right, about $80, right? $80 to buy to close this position, okay? That's what that is, okay? So, if I was going to roll this position, right, all a roll is buying to close the position and then selling to open another one, okay, for a lower strike price, higher strike price, depends. Let's just show you what I'm talking about, right? So if I go to buy to close right here, right, you could see this is my owned contract, right, my August 1st 30 put. Then I can click, it would close that out. I would pay, let's say, around $75 to close this position out if I went between the bid-ask spread right here. And then I would sell to open another, right, cash secured put on this. So my put expiration, let's say I go out a little bit further, right? Let's say I go out August, the week after, right? And then I select another strike, let's say the 30s right here, right? Now I can do that, right? So if I did a net debit, I don't want net debit. So this, sometimes you have to like mess around with this. So this would obviously I'm extending time. So this would cost me $8.65 to do this roll, right? But if I go out, let's say a little bit further, right? And maybe I change my, let's see here, boom. Okay, so here I would get a credit. Here I would get a $20 credit on this on doing this roll, right? So that's premium that would be given to me in my account. Now I have videos that dive into rolling way more, guys. That's not the point of necessarily today's video. I do have stuff like that, but when you roll, like, for the most part, this is a blanket statement. I usually only want to roll out if I'm making a credit. Now, there are times where if a stock is blowing up and I just want to capture more of that appreciation sale, I'll do that. That's why I cannot stress it enough. Make sure you at least are tracking everything you do. I have a couple calculators that I use. This is my cash secured put calculator. This is my covered call calculator. Plug the numbers in here. Does it make sense? Like, at the end of the day, it's like, what is your ROI goal, right? If your ROI on your collateral goal is hit, like, I'm happy, right? I'm happy. But you don't even know your ROI collateral goal, then you're kind of doing this game blind, right? And you want to make sure you're always tracking your ROI and collateral. It is the most important number. And all these calculator stuff are free inside of our Facebook group for you guys. So that link will be down below in the description of today's video. And if you're somebody that wants a more handheld approach alongside me and an incredible group of option sellers that do this day in and day out, sharing trade ideas, sharing resources, doesn't matter if you're managing, a $20,000 account, or $1 million account, right? If you're a non-toxic person, you're financially stable, I invite you to check out and learn more about the ARC option strategy and the option seller school. The first link in the description will cover that. If you like what you hear, you can book a no pressure, call with me and my team. We like to get to know everybody that we bring in here. All our members can attest that it's a non-toxic environment and it's people just sharing stuff, and not just, trading related, right? Actually becoming friends, right? And talking day in and day out about this stuff. So if you want to learn more about that, click the first link in the description down below, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.